Welcome to Talk Tickers. Today, we're breaking down Comcast's Q4 2025 earnings call. And let me tell you, this was a report that sent some seriously mixed signals, causing a huge tug-of-war in the stock.
So to really get what happened with that wild price action, we have to start with the headline numbers. Because right out of the gate, this report was pulling investors in two completely different directions.
And here it is, the tension in a nutshell. On one hand, you've got adjusted earnings per share coming in at 84 cents. That's a solid beat, crushing the 75 cents analysts were looking for. But on the other hand, revenue landed at $32.31 billion, just a little bit shy of what the street wanted. A classic beat and a miss.
Now, this kind of disconnect almost always leads to what we saw here, a total whipsaw. The stock got hammered in the pre-market, down almost 3% as everyone focused on that revenue miss. But then, as the day went on, it did a complete 180, reversing course to close up nearly 3% on some really heavy volume.
This brings us to the big question, right? What was the bad news that had everyone hitting the sell button at the open? And what was the powerful good news, maybe buried a little deeper in the report, that fueled that incredible turnaround?
Let's start with what spooked the market. This is the bear case, and it all boils down to the immense pressure on Comcast's most important business, broadband.
You know, you don't even have to take my word for it. The CEO, Brian Roberts, said it himself on the call. He flat out said they're at an inflection point and that competition has never been more intense. He's telling you the game has changed.
And here is the number that put that fear into focus. Comcast lost another 181,000 broadband customers this quarter. That continues a really worrying trend for what has always been their core profit engine.
So the big picture here is that Comcast's old dominance, that wide moat they used to have, is being seriously challenged. You've got aggressive fiber buildouts from the telcos and the huge expansion of fixed wireless from mobile carriers, and they're all chipping away at Comcast's customer base.
So, what's the plan? How are they going to fight back? Well, management laid out a three-part defensive strategy. First, they're not raising broadband prices this year. Just hold the line. Second, they're retooling their bundles to make the service stickier, harder to leave. And third, and this is a big one, they're leaning into convergence, using free mobile lines to lock households into their whole ecosystem.
Okay, but that broadband pressure, that's only half the story. The reason the stock made that massive comeback is because of the bull case, and it's all about some powerful growth drivers and an absolute cash machine.
So while broadband is having a tough time, other parts of the business are just on fire. Theme parks revenue, it's surged almost 22%, a record quarter. Peacock, their streaming service, added another 3 million subs, and their wireless business pulled in a strong 364,000 new lines, which shows that convergence plan is actually working.
But really, the absolute showstopper, the number that completely flipped the script for investors on earnings day, was this one: free cash flow. Get this. The company generated an incredible $4.37 billion in free cash. To put that into perspective, Wall Street was hoping for something around $2.23 billion. They almost doubled the consensus. This was a massive beat that just screamed financial strength and gave investors the confidence that, yeah, they can afford to fund this turnaround.
Okay, so we've got this battle, right? A pressured core business on one side, and this cash-gushing machine with other growth engines on the other. That brings us to our forward-looking take, the next call. This is the question every single investor is trying to figure out right now. How do you weigh these very real challenges in broadband against the undeniable financial power and the growth in other parts of the business? Where do you place your bets?
All right, so for us, we're initiating with a market perform rating. This really reflects that fundamental tug-of-war at the heart of the story right now. There are absolutely compelling reasons to be bullish, but there are equally compelling reasons to be pretty cautious.
Our whole thesis is simple. We're calling it the cash machine versus the pressured core. The bulls are going to point to that massive free cash flow, the real growth in parks and peacocks, and look out to the second half of the year for when those free mobile lines start converting to paying customers. But the bears, they're going to argue, hey, broadband is still the main profit engine here, and it's shrinking. This turnaround is going to be costly, and we might not see real results until 2027.
And that brings us to what we call our outrageous but plausible trade idea. The thinking here is that the stock's probably going to trade sideways for a while, right? Until there's clear proof the broadband strategy is working. So the idea is to bet on a big move later this year, but in either direction. You can use a long-dated options play called a strangle.
It basically lets you position for a huge breakout if the turnaround works, or a sharp drop if those broadband losses get even worse. It's a pure play on volatility.
This is not financial advice.